Okay, we just finished the transaction withdrawing, so now we're going to come over here. It says paid automobile expenses for the month, $1,600, and miscellaneous $300. So we're actually paying two things at the same time in this one. We're going to take care of both of these expenses. Expenses have a what balance? They have a normal debit balance. So to increase the expenses, we will debit each one of those. Give it a date. I did not mean to do that. Hold on, here we go. Give it a date. Try that again. 8/20. Okay, and we have an automobile expense. Spell it right. And that amount was $1,600. And we have a miscellaneous. I'm just going to abbreviate it. And that amount is $300. Now, we are out cash in the total amount of $1,900 to pay both of these, correct? Okay, so cash, let's talk through the logic again. Cash has a normal debit balance because it's an asset, okay? So it increases with a debit. Therefore, if we're going to decrease cash, we are going to credit cash. So let's come over here and make a cash credit of the total, which is $1,900. Now remember our rules of debit and credit again. We said you have to have at least two accounts. All these up here have only had two accounts. This has three. That's still okay. At least two accounts is the rule. And the total of the debits have to equal the total of the credits. Here we have $1,900 on the debit side and $1,900 over here on the credit side. Okay, so now let's see. We're on this one. We paid automobile expenses. No, I'm sorry. We paid office salaries. Okay, so let's just say it's $825. And we're going to pay office salaries. Let's just use salaries expense. Okay, and again, this is an expense. It has a normal debit balance. Okay, so it is going to increase with a debit. Let's go ahead and debit it for $28.50. How did we pay this? Well, we used up cash. Cash again has a normal debit balance. It increases with a debit, therefore it will decrease with a credit. Okay, now we determined that the cost of supplies used was $1,100. If you remember up here, we bought $2,500 in supplies. They're just simply saying we have used up $1,100 worth of our supplies. So on 8/30, we're going to adjust the amount of our supplies. We're increasing our supplies expense. Expenses have a normal debit balance. Okay, so we're going to debit the supplies expense to say, hey, we used up those $1,100, but then we also have to take it out of the account for supplies. It has went from being an asset, it was a resource available to us. That asset has now went down, so when we first got it, we increased it with the debit, but now that it's going down, we have to credit the asset supplies and debit the supplies expense. And just to throw in some terminology, supplies is an example of a prepaid expense. Prepaid expenses are items that we do know will become expenses eventually. Supplies, it's an asset, it becomes supplies expense. Prepaid insurance is an asset, but it will become insurance expense. If we prepay rent, that's an asset, but it will become a rent expense. Okay, so that's a nice little example here to show you how we use these rules of debit and credit when we need to apply them in making journal transactions. Now I have one other thing I want to cover, and I'm going to cut this off and